Welcome to XM.com. This is the Daily Market Comment by Raft. I'm Cristina Marujos. Expectations that high inflation is here to stay continue to firm the bond markets, sending global bond yields to fresh highs. With energy and metal prices still soaring, supply chains crumbling, and wage pressures building up, investors appear to be more attuned than policymakers to the prospect that this inflationary episode may not be transitory. The Bank of England will likely follow in the Reserve Bank of New Zealand's footsteps and hike rates in November, despite today's softer-than-expected UK CPI numbers, while the RBNZ itself might opt for a more aggressive 50 basis points increase in the cash rate at its meeting. The Bank of Canada could also turn more hawkish, as Canadian inflation figures due later today are expected to show annual CPI accelerating in September. However, investors are at odds as to how soon the U.S. Federal Reserve will take the plunge. Fed Governor Christopher Waller hinted on Tuesday that a rate hike in 2022 might be warranted, while anxiety about persistently high inflation will likely be echoed by other Fed officials, as a number of them are due to speak later today. Nevertheless, markets think the Fed is in a better position to stall before hiking rates than other central banks, as the risk of permanently high inflation is greater in countries in Europe and Asia that rely hugely on energy imports. In the currency markets, yield differentials were in the driving seat as the bump up in U.S. 10-year yields propelled the U.S. dollar to a fresh 4-year high of 114.69 against the Japanese yen. The euro eased around $116.25, and sterling lost some steam too. However, the commodity-linked currencies extended their gains versus the greenback, with the Kiwi once again outperforming its peers. The ongoing rally in the price of key commodities is underscoring the somewhat more positive outlook for the economies of Australia, Canada, and New Zealand compared to the United Kingdom and Eurozone. There was a similarly mixed picture in equity markets on Wednesday, as stocks in Asia and Europe drifted in both directions. Wall Street enjoyed its fifth straight positive day on Tuesday, as all the indications are that it will be another stellar season for earnings. Netflix reported better-than-expected subscriber numbers, and Tesla is the next big tech firm to reveal its Q3 earnings after today's market close. However, E-mini futures for the S&P 500 were struggling in European trading, slipping in and out of positive territory. Thank you for watching today's Daily Market Comment here at XM.com.